Billionaire Charlie Munger is renowned for his carefully thought-out investments, which have pushed him to the top of the market. What can we learn from the investor that has crushed the market year after year? I have analyzed some of the investment rules he uses to grow his enormous wealth. I will teach you how to implement them in your life. Here are Charlie Munger's most mind-blowing investment rules. Advice 1. Limit your downside. Most investors attempt to beat the market to increase their profits, but this is typically a mistake. After all, some of the world's smartest individuals struggle to succeed when working on Wall Street, where they have access to seemingly limitless resources. But according to Charlie Munger, avoiding foolish mistakes is more important for investing success than being extremely brilliant. He says, "It is remarkable how much long-term advantage people like us have gotten by trying to be consistently not stupid, instead of trying to be very intelligent." One of the few places where you can consistently outperform the norm by making rational, average judgments over a lengthy period of time is the stock market. You merely need to avoid mistakes, especially during a down market, so you don't need to be a genius. Long-term returns will be outstanding if you can avoid mistakes like selling stocks at the bottom of the market, chasing buzz stocks without doing your research, or attempting to time the market. Advice 2. Never invest in crypto. Munger is certain that the crypto craze is a mass folly, and he warns others as well. "I think anybody that sells this stuff is either delusional or evil. I won't touch the crypto. I'm not interested in undermining the national currencies of the world." When asked what advice he would provide to other investors considering cryptocurrency, Munger responded, "Total avoidance is the correct strategy. Never touch it, never buy it. Let it pass by. Shares of companies that generate cash are a much better investment." He claims that stocks have a real interest in real businesses. Crypto is an investment in nothing, and the person trying to sell it to you claims to have a unique variety of nothing hard to produce more of. Even if someone claims there is no way to produce more of it, Charlie doesn't want to purchase a piece of anything. To Charlie, trading in or purchasing these things is nearly ridiculous. "I just avoid it as if it were an open sewer full of malicious organisms. I just totally avoid it and recommend everybody else to follow my example." Advice 3. Don't buy overvalued stocks. Let's start with his first tip. Cash is trash, but buy for the right price. Many international investors are most worried about inflation and aggressive central bank interest rate increases, but the 98-year-old is not overly concerned. Munger claims, "I'm always aware of it, but it doesn't stop me from operating. I'm 98 and a half years of age, and I've seen a lot of inflation. I intend to live through inflation. I've lived through a lot of it already in my long life. It doesn't discourage." According to Munger, inflation is always with us in an episodic way. That's what modernity causes. So eventually, I assume every currency will go down to nothing. That's my basic cynical view. Munger admitted, however, that increases in interest rates would have a major effect on stock prices and company values. However, despite the recent US stock market drop, his perspective has remained largely unaffected. He claims that the stock market constantly experiences ups and downs. As its enormous cash hoard decreased from $147 billion $215.5 billion at the start of the year to $106 billion in the first quarter, Berkshire has been investing it. In May, Mr. Buffett disclosed that Berkshire had spent $51 billion on stock purchases and $3.2 billion on share repurchases. Munger states, "We didn't accumulate the cash because we were anticipating a big decline where you can spend it. We accumulated the cash because things got so competitive and prices for good businesses, we couldn't find any good buy." He added, "Of course, we hope Berkshire will eventually find a good investment for its accumulated cash." Advice 4. Always have a stake in energy. It fuels the world. Munger is unwavering in his belief that fossil fuels, notably Australian liquefied natural gas, have a significant role to play in meeting the world's energy needs amid the global energy crisis fueled by the conflict between Ukraine and Russia. "I believe that we will continue to use fossil fuels for a very long time because we must. If we didn't use natural gas to make nitrogen fixer fertilizer, the world's population today wouldn't be able to eat if you think about it. He said, "We're not going to get rid of fossil fuels, we're just going to use less of them." Last month, Berkshire upped its investment in the US-listed Occidental Petroleum Corp. To 17.4%, or almost $9.9 billion. A significant shareholder in Chevron, which owns the Wheatstone project in Western Australia, the Northwest Shelf LNG plant, and the enormous $54 billion, $78 billion Gorgon gas project is Berkshire. Munger declares that project is a great achievement of engineering. But it took some perseverance on Chevron's side, since Chevron is quite good at that kind of engineering, and it was highly desirable to Australia to acquire that amazing natural gas. That item costs a lot of money. Munger has strong feelings about fossil fuels, but he also has optimism about renewable energy. "I think we'll be using fossil fuels for a long time ahead. Both things are going to happen, and Berkshire is one of the leading producers of renewable energy in the US. So, I also believe that more of the world's power generation will come from renewable resources. In Iowa, where we hold the majority of the electric utilities, renewable energy sources account for far more than 50% of total electricity generation." That is all we have for today. Make sure to let us know your thoughts down below. Subscribe to the channel if you find this content useful or interesting. We make videos like these every week. We'll see you in the next video. Thanks for watching.